Hello traders, Cousin Vinny coming to you on Sunday, October the 13th with a market read and thoughts on a watch list or focus list for the week ahead. Displayed is the NASDAQ composite, and we can see that this ascending wedge was broken on Tuesday to the downside. We hammered. We got back above the trend line of that wedge and moving higher to this upper trend line, it appears, on the comp. If we look at the volume, we can see where that surge was on Tuesday, Wednesday, and the volume was somewhat lower than those 2 days on Thursday and Friday. However, the bullish percent here on the comp continues to stay in the green zone between 62-ish and the highs that we put in here in August. And we can see that the NAMO got down to a buy zone when we hammered on Wednesday. We can see our other indicators are turning up. This is no longer red. This is really in the yellow zone and starting to turn back up on the MACD and the NASI. And we can see the NASDAQ stocks above their 50-period moving average got down to 45 and turned back up. The ADX is still moving sideways, as is the ADX on the S&P 500. This is a chart of the S&P 500. We can see that we are back above this Kirby level here, right at 1687.18-ish, and we're moving higher for the time being. If you are bullish, you are thinking that we could get to this upper trend line in the near term, being this is typically a bullish week in terms of sentiment for the S&P 500 and the Dow. If we look at the advanced decline, we can see we had that 90% surge that we talked about on Thursday. After this 90% red day back in the end of August, similar to what we saw here back in November when we bottomed and continued higher from that point. That isn't to say that that's what is guaranteed. It's more of what I'm expected just by reading the charts. Now, of course, the caveat is that the Congress really creates turmoil in the markets, and we break down below this level here. On the spiders, we had a gap up, so there's a possibility we could fill that gap. Now, this is a chart of the S&P 500 with the bullish percent and my other indicators that I watched during the week to confirm inflection points. We can see that the trend going back to February held. We had a hammer there, taking the lows in June up to the recent highs. We were at the 50% level right here at 1645, more or less. We can see that volume and bullish percent is now at 76.40. It could see a surge back up to 85 if we got good news out of Congress, out of DC. NYSE is turning back up, so this yellow signal will turn into a green signal if this continues into the week. Now, normally I look at these as the more indicators that are green or red or yellow give me certain views or bias of the market. NYMO got down to, I believe it was 70 before it turned back up on that hammer, and we can see MACD now is giving us a green signal, about to go green on Monday if this continues. ADX is still moving sideways below 25, which is indicating that we could continue to see sideways action here between these highs and these lows. Okay? No guarantees, I'm just saying. The number of stocks trading above their 50-period moving average, the SPX A50R, you can see where we bottomed down here, similar than that we saw in the August low, that 5% pullback, and the June low, that 8% pullback, respectively, on these three corrections. Still in the wedge, moving higher though. So that's positive for the markets. If you're bullish, Again, you're looking for this upper trend line, and it looks like with this Kirby level up here and the 52-week highs right above us, it's likely possible that we could see this upper trend line in the short term. Good news out of Washington would absolutely affect this in a positive fashion. This is a chart of the XIV, VXX, and the VIX. We can see that in previous spikes in the VIX fear index, we got into the buy zone on Wednesday, and we pointed out that we were probably going to see an inflection point here given the other indicators I just pointed out were also nearing inflection points. Okay, so we can see where the VIX got up to just over 20, 21 I believe, and we moved lower. Note that the red lines and the green lines are those inflection points and where we had bottoms and tops previously, just using this particular indicator. Looking at the spider sectors, we can see the XLY, XLK, XLI, XLF, or the offensive sectors in the 9 spiders are looking good. We would like to see XLF moving higher, obviously. We saw a lower volume on Friday than we saw on Thursday, but we are back above our 20-period moving average. The materials are looking good, again on lower volume. We are above the 20. XLE is looking okay. Make sure you check out Nat Gas. Arthur Hill over at Stock Charts mentioned Nat Gas and the breakout and the components in the ETF FCG, and the components that Arthur Hill, courtesy of Arthur Hill over at stockcharts.com, point out this breakout above this triple top and the 52-week highs here, and continuing to move higher currently. Also note the Stock Charts technical rank indicator. FCG is above 90, looking really good at 97.7. Now this can embed up here, but for the most part, just keep an eye on this chart and these components for possible trades on either a pullback in some of them or a continued surge or breakout here on volume. You want to see volume if this breaks higher on these names. Okay? And also note the Nat Gas chart. If we break above this level, we could see a move higher. Note UNG is moving sideways. That's the or the futures. Okay? Nat Gas is outperforming. Check out the RSI on all of these sectors, that they're surging as one would expect with the news that we got on Thursday, that a deal might have been struck, obviously, if you're paying attention to the news this weekend. So there could be some turmoil on Monday. I decided to start showing the scans that I look at during the week. This particular one is a pullback scan, which looks for what I call the box trade setup. So looking into this list, you can see the names that pulled back on Wednesday and got a surge on Thursday, Friday. So we had a number of box trade setups going into the week, or the end of the week, I should say. Note where Yelp is, ASML, JDSU. In this sideways range, we could see a move back up to the 16 level. So let's take PetSmart, a retailer. Note where they are moving back above their 50-period moving average after a nice move down and an area of better risk reward on that bounce. Let's take a look at some other scans. Let's take a look at a SAR buy signal scan, and we'll put that in a new list. I made sure with the scan it was stocks that were trading above $40 a share, and we can see the list here has a lot of good setups that broke out on Friday. Just going down through the list, you can see we have quite a few stocks here. I'm not going to focus on all of them, just pointing out a few. Las Vegas Sands, Lowe's. You expect HD would also give you something similar. We pointed out middle of the week the financials, MasterCard and Visa, that pulled back down to the 50 period to look for a bounce. We had this harami on Wednesday and a nice surge if you traded that. I know Learjet trades MasterCard a lot. Note Simon Property. Back above its 50 period, you have a 2050 cross to the upside. Watch this for a continuation move. This is a scan of, I call a DMARC 9 sequential. And you can see LNG here surging above 52-week highs. If you want to learn more about DMARC, just go to my website and click on the strategies and DMARC indicators. And that'll pull up a page that gives you an idea of what the scan represents and how it's achieved. So that's going to do it for me for the weekend. I'm going to go spend some time with my kids outside. Check my watch list here later, where I post it every week. And you can see the stocks that I'm still in, most of these swinging. So again, this is Cousin Vinny coming to you from Day Trader Bootcamp and theclosingprint.com. Take care, and we'll see you on Monday.